Hey guys, Max Convexity. Hope everyone's having a great day. Let me get my microphone over here so you guys can hear me. All right. Um, let's let's check out the profit boxes for tomorrow. And we're getting ready to cook some steaks here in this on this grill behind me. So I need to get done and get out of here so we can turn this into a kitchen. All right. Well, let's see here. Let's start with Jeppy. These managers sold 262 puts for the 5220 strike, which is also max profit. Anytime you sell an option, the strike price is max profit. All right. The price of the option was sold for is right there, $23. So you have to subtract 23. We'll call that 24 because it's 23.94. So take 24 away from 52.20 and you have 51.96. So that's the break even. And then max profit, of course, is the strike, 52.20. So max profit would be 627,000. This is 46 basis points. Friday, they captured 54 basis points. Remember, they try to average 25 of these a day. So that includes losers because occasionally they lose basis points. Thursday, they lost 1.2, 120 basis points. All right. For the month, they're down 7 cents. Dividend estimate is looking really light. Now, the caveat on this is there's one day where there was not a lot of extrinsic captured. And there's actually a couple of days, and it's bringing the average down. So look how low this dividend estimate is, 40 cents instead of 79. This is the same story here. There's one day where the extrinsic was just nothing, $50,000, and the intrinsic was 1.1 million. I wanted to think that was it was an error, but I never did catch an error. I don't think it was. I think maybe I don't know. That's got to be an error. That's got to be an error. But I don't know. I guess depending on the strike and what's available, maybe they just sold an option that didn't have much extrinsic. Well, in any event, that estimate looks low too. It's about half of last month. Then IWMY is in good shape. It's about the same as last month. Now, IWMY hasn't had any bad extrinsic capture days. All their extrinsics have been, about the same. All right. Well, anyway, Triple QY, these guys sold options at the 18,200 level. So 18,200 is max profit because that's the strike price. They sold it for, we'll call that $122. 122 minus 18,200 equals 18,078 or 18,078. All right. Max profit on this trade's 1.8 million or 67 basis points. This would, if they get this this winner on Monday, this would take them only down 4 cents a share on the month as far as earnings go. Has not been a great month for extrinsic capture, especially in two of these funds. And especially if the numbers are right, but I think they are. I'll check again. I have a one place I can check the other one, and I'll check it and let you guys know. But as of right now, so I'm trying to start a sheet on the SPYT. I'm always griping because I'm saying the SPYTs. Anyway, it's not boring making money, and I'm analyzing everything. I have analysis paralysis. I'm trying to advertise. I mean, I'm trying to analyze the efficiency of the trade, the profit to the risk, and anyway. So I'm just looking at a bunch of ideas. right here is the price change. Pretty much all the stuff I'm analyzing, you can see manifesting in the price change, which is kind of like the bottom line. So this is just in the past week. This is last Monday, Tuesday, Wednesday, Thursday, or Monday, Tuesday, Wednesday, Thursday, Friday. Monday, Tuesday, Wednesday, Thursday. Guess I don't have Friday's close yet. I have to manually input it. It's a long story. Okay, well, I'm still working on the SPYT sheet. Basically, what you can see is you see buffered response everywhere. Right here, the index, which the underline is just the SPY. It was down that day 1.24. SPYT was only down 1.01. It caught about 25% less. And that's what it is. It's getting less on the upside and less on the downside. So it's nothing that we wouldn't expect. I'm trying to find a study in here that's interesting. And I'm thinking about maybe comparing the SPYT to JEPY. JEPY does a full cap and SPYT just partially caps the upside, but they both harvest the volatility from the SPX and by extension, the SPY. It's a great fund. It's a fascinating fund. I'm still working on what to chart. I'm making a TRES. I'm also doing some TRES content, some more TRES content too. But for now, TRES is fine. I'm gonna start keeping track of the dividend on a live basis and projecting it throughout the month. I haven't been doing that. I just at the end of the month, I might make a guess or something, but I'm going to start tracking it on a daily basis like I do with the other funds. Same thing with SPYT. Well, SPYT, there's really nothing to track, but I'm going to find something to track on SPYT. Okay. Let's look over here at these single name funds. We'll start with Coney. Okay, so you can see these guys just have one option out there, at least that I could find. I watch Retire on Dividends and I just checked the Yield Max site, but I miss stuff all the time. I'm sure I'll catch it in the comments if they have more than one. A lot of these have ladders, but not that one. These guys have two. These guys have some options out there, 182.50 and 172.50, right? And I think that's all. So they have a two-strike ladder. So Tesla ought to be interesting this week to see how they do. See if they bounce or if they keep selling off. Or they kind of did both last week. They bounced huge one day and then they sold off the rest of the week. I mean, anyway. Now we'll look at NVIDIA. Now they had several strikes out there. In fact, one of them I wasn't sure. Or maybe these guys just have, no, these guys just have one strike. That's right. They had several last week. For right now, they just have one strike. Then we'll look at Misty. God, that was a hell of a sell-off there at the end of the day. But they have a ladder of three strikes. They're the guys that have three strikes. All right, well, let's see. What time is it? 5:20. So their stock index futures opened 20 minutes ago, and you can see even though my quotes are 20 minutes behind, there was a slight little up gap on the NASDAQ from Friday's close right there. But in any event, that's nothing to see here. It opened with inside of Friday's range. Like I said, these quotes are 20 minutes behind, so something could have happened in the past 20 minutes, but all right, I'm going to subscribe to live quotes. As soon as I get off of here. Next month, we're gonna have live quotes from here on out. But in any event, that all of these just open right in the middle of the Bollinger Bands and close to where they closed the other day. All right, I was going to open the buffer report. Hang on just a second. Appreciate your patience. Oh, I have a cool news. Okay, I have something I've been working on. Check this out. For those of you that stayed around, maybe it's worth it. The update was going kind of sideways, but I got to get out of here and get dinner going. Okay, so I made a new chart, and I'm trying to make a template where I can do this easily for any. But anyway, the template part of it's not going great so far. But what I have is in this case, it's the price of triple QI since inception, along with the price of the parent asset, which is NASDAQ, also since inception, or I actually use triple Q. In any event, then I compare the price change of each of them to each other, basically a running buffer report. Well, then I can also measure it since inception, and then I can also measure it on a rolling basis. So look at this. All right. Red is NASDAQ. This is since inception on the triple QY. Okay. So people are always saying these are going to do terrible when the market's down. Well, they didn't this time, and they don't any of the other times either, because of these things get huge buffer because of the dividends they pay. Dividends go up when the market goes down because volatility goes up when the market goes down. So you get a little double whammy there, a little bonus, even though the price of your shares also goes down when the market goes down. The idea is hopefully it bounces back up, and but in any event, so look here. So this was in October. The triple QY was down 5.2. The triple Q was down 8.9. So about 9 to 6. You can round that to 9 and round that one to, well, it's not even 6, 9 to 5. If you wanted to round it, it'd be 9 to 5. So that's a ton of buffer. It's only getting like 60% of the downside. Now, the bad thing is, look on the back here on the upside. Here we have a couple months later, we're up 9% on the triple Qs, and the yield fund's only up 6%. So it's only getting about 66% of the upside either. It's only getting about, or it's buffering about 1/3 both ways. It's losing about 1/3 of the upside, but it's also losing about 1/3 of the downside, just based on these numbers. Now, there's another way to look at it too. Oh no, you got to be kidding me. All right, well, I'll do this. I'll fix this chart. I'll fix this chart on a subsequent update because this was really cool as well. How did this get messed up? Well, what the other chart showed is just on a 1 month rolling. So just like over the past month, so we can look over the past month, say the underlying is up 10%, and the high yield fund is up 8%. So it would plot 10 and 8%. So it does a rolling 30-day readout. So you look at a 30-day print at any point in time. And I think that's important to look at what the price was this month versus what the price was last month, the 1 month change. And you have to include the dividend in the, because the dividend counts and it goes into the total return. So, but in any event, I don't know why the chart freaked out. It was basically, it showed the same thing as this chart, but it was even more muted. The highs were lower and the lows were, the highs and lows were even more compressed than this chart. Because you were just looking at a 30-day slice in time. So if you look here all time, the market's up since inception of the triple QY, the triple Qs are up 16, 17 points or something. So that's since last September, or no, 9/13. Yeah, September 13th. All right. But the high yield fund, including the dividends, not dividends reinvested, just taking the dividends as cash, but including them in your total return. But like I say, not reinvested. If it was reinvested, it'd even be better. But I never use reinvested. I just factor taking the dividends as cash. In any event, all right, but that's up about 8.5%, where the parent asset is up about twice that. So, it's about what we'd expect. It's getting a lot of buffer. It sucks on the upside, but it's great on the downside. Anyway, I'm going to make more charts like that, and I'm going to do one tomorrow for JEPI and IWMY and all the other ones, and we'll see how they compare to their parent on a 30-day rolling basis, but also since inception. We'll try to see if we can spot any patterns that might be helpful. All right, I'm looking for this buffer. Maybe we'll see what buffer's up to, the buffer report, and then I'll let you guys out of here. And I need to clean the grill and get dinner going. Plus the sun's getting ready to hit me. It's getting ready to be miserable right here. Hopefully the charts work. Sometimes over the weekend they don't work because the data is resetting or something gets messed up. But yeah, this looks about right. So this is the past week. This is 1 week change. Look, there's Aspen, the white dog. His name's Big Dog, actually. So here's the weekly change on the index. Great week for Defiance, but it's because the markets went nowhere. And so Defiance gets that daily churn from the freaking options activity. Not to mention we had high volatility this week, which Defiance was able to monetize. So let's see what we got here. So here's a 30-day chart. All right, and here's a 1-day chart. And see how your favorite one's doing. On a 1-day, they all underperform, but the longer time frames are more important. You have a lot of outperformance here when you go out a week, and then you go out 30 days, you have a lot of them outperforming. NVIDIA outperformed, Misty outperformed, AMZ outperformed, and a lot of these other ones were in line and were what you would expect. YBTC outperformed. All right, guys, I got to get out of here. All right, you guys have a good day. We'll be back in the morning, probably about 8:30 or 9 Central Time, and we'll see where the market opens. All right, later.